I think this rally, this bubble that never ends, is getting very, very long. And, for subscribers, we were watching this wedge for the last year, which often is a topping pattern, a channel or a wedge. And we broke down out of that, and that could have been it. But if that's a top of this magnitude, you would expect a pretty sharp crash to follow, and that has not. I also, as everybody knows, some people are interested in Bitcoin, some are not, but I'm interested in Bitcoin as the bubble of the bubble and the leading indicator. And it tends to lead stocks, and Bitcoin just made a new high this week, near 67,000. It's pulled back some, but it's probably going to go. My targets have always been 85,000 minimum, 115,000 maximum, 90,000 also looks really low. But Bitcoin is likely to make a substantial new high, and the Elliott wave pattern really confirms that. This looks like it needed a fifth wave, unlike the past 4-year cycles in Bitcoin where it just makes almost all the gains in 3, 4, 5 months, then it's over. No, this one had a bump up, a one wave, a down, then the sharp wave we saw into April, peaking near 65, and now this last one. So that also bodes well for stocks. If Bitcoin's going to run, stocks are likely to make another new high. S&P actually made a slight new high yesterday. NASDAQ hasn't. Russell 2000 has been lagging. So it's really the S&P that made that new. But I expect stocks to make new highs. And the difference here, since we're so late in the cycle, stocks may not run that much. And the critical chart I continue to look at, for subscribers know this, not normally, but the Russell 2000, the small caps, because you expect it not to make new highs towards the end of a rally, a major top, when the large caps are. And that is still the case. The high was still back in, I think, March 10th or something at 2360-ish. And it's close to that, but it hasn't made that. And it may make a slight new high, but it should lag. And it has clearer targets. So breaking 2360 on the Russell 2000, now that the S&P's made a slight new high, is the most bullish thing that could happen to say stocks could go a good bit higher, maybe like in the realm of 6-10% or something like that. So I'm going to be watching that over the next couple of weeks. This is definitely a time, for subscribers to be looking for updates. And it's definitely a time to be looking, to be getting out of risk assets. I mean, again, you got real estate you've been thinking about selling, or you've had on the market. I'd push it. Real estate usually will hold up longer than stocks, but stocks look like they are going to peak somewhere between very near term, if we get a slight new high, and the end of the year. I do not see this rally lasting into next year. And a strong January is usually strong for the year. I do not expect that. I think this really is. That wedge ended up being a really strong third wave. We've seen a fourth wave correction and consolidation. Looks like we have more, I think, of a minor fifth wave. But again, the break above 2360 on the Russell 2000 would be the biggest sign that the fifth wave is going to be a little stronger, but I do not see it lasting past the end of this year, if that long. It may only last days or weeks here. So it gets very tricky here at the top, and you have to know, and we're struggling with this in Australia right now because I have a fund there we started last year, that in near tops, the market gets more and more volatile, and the same thing in bottoms. So the easiest gains are that 80% in the middle, but that top 10% or so and that bottom 10%, it just fakes and fakes and fakes. And we're obviously in that. I mean, the market looks, like it's going to crack, and then it suddenly goes up. And there's not a day hardly where all the stock indices go up together. The small caps lead one day, and the Dow or the S&P or the NASDAQ leads other. And then the NASDAQ's been the weakest lately, and it's usually strongest at the end. So again, this is a tricky time. Be on alert and look for updates, because I do think we have a top between the next week or so and the end of this. And the first crash is the worst in a bubble, usually at least 40%, as high as 53, 55%, and I'm looking at the high end of that range this time by my megaphone pattern, which people have seen in the newsletter a number of times, which projects the first crash in the S&P. I mean, remember this number, should go down to 2,000 to 2,100, at least 2,192, and that was just the 2009 low. So this crash will be over 50%, 53 to 56%, just to get us back to the last major lows before this wacko stimulus program, which has been the first one to be not in a fundamentally strong period. Okay, and you got to remember, my cycles, demographics clicked out after 2007, and the most important innovation technology cycle clicked out late 2019, early 2020. So 2020 to 22 for stocks is the most difficult period, and into 2023 for the economy. I now think, since they pushed this so long with strong stimulus, that the stock market probably is not going to peak bottom until mid to late 2023, and then the economy will be on a 6 to 8 month lag.
Before we continue, help us clicking that YouTube like button and subscribe now to our channel. This shows the algorithm that you valued this information, and it helps us spread that message. Sharing is caring. And now, let's continue.
What to do in such a situation? Inform yourself and keep your financial education strong. We from the Compact Group offer our loyal subscribers a free educational portal with first-hand monetary, financial, and economic knowledge. Enter our invite-only Insider Club by clicking the link below. You will get access to first-class information far earlier than the rest. We have prepared a special deal for all our members, where you can access a giant pool of Robert Kiyosaki's financial wisdom for just $1. To find out more, simply click the link below and join our Insider Club absolutely free. But there is more you can and should do. Build up several streams of income. More and more people realize that they have to take their future in their own hands, but they don't know how and where to start. We from Compact offer our Insider Club members unique opportunities. Strengthen your financial muscle and get the edge. Click the link below. Become part of our free Insider Club. No financial obligations. But there's one important thing you have to know. You have to become active. So do it now. Become active, and see you on the other side.